So, Anthony, a lot of eyes are on the state of Georgia right now. So, when you look at businesses that are open, have reopened down there economically, is that a good barometer for other states, other regions, other businesses? And what's a better example? In other words, like what state, region would you look for as a good example of a reopening?
I think a good example of a reopening is when I see a state or a locality that you're seeing the number of infections going down. We want to see that. There are some openings where they're basically jumping the gun and starting to reopen before we've seen a real decline or even a stabilization of new infections. So that would be a good example. Now, the good news about this is that if you see some states that are reopening before you see the peak in infections, then it's a good experiment to find out if that's a viable strategy or not.
That being said, Anthony, what is the economic impact of reopening and possibly seeing a second wave or spike in infections um, versus just staying home for another month?
Well, I think that if we stay home for another month, I think that the results are pretty obvious, and that is that you continue to shut down massive parts of the economy, and the economy continues to contract, which is why the Congressional Budget Office is already estimating that we're going to see a 40% contraction in real GDP in the second quarter. Now, that number is a few months away from being released, but that is what the Congressional Budget Office has said. And I've actually looked at the estimates that the Congressional Budget Office makes over time, and I find that their estimates are pretty good. They're not as good around the turning points of a cycle. In fact, they're twice as bad or half as good as they are during regular years. But nonetheless, I think that they have it right. There's going to be a real deep pocket contraction in economic growth in the second quarter. I would not be surprised if it's in the neighborhood of 35 to 40% in the second quarter.
How are businesses and corporations balancing the liability of reopening it? And what are their insurers saying? Are they in support of this?
Well, right now, businesses are lobbying and, in fact, hoping that the government will give them a free pass, and you could say in legal terms, that if somehow something happens when they open up, they're not legally liable. We'll see whether that happens, but certainly a lot of businesses are hoping that they get see some legislation passed so that they're not held liable. Remember that at any given point in time, there's always a risk when you go into a restaurant, whether you can get the measles, whether you can get the flu. But obviously, this COVID-19 is a little bit more serious. But if they get some sort of a legal exemption, that would make reopening a lot easier.
This is also a very big week here in the United States for data when you expect earnings, trade, manufacturing numbers. If you can chart out the road ahead, what do you see in the short term and in the long term here?
Well, what I see certainly is Wall Street is very optimistic about the future. They're feeling very, very good that things are getting better. When you look at forward price earnings ratio for the stock market, that's looking at what the consensus of S&P 500 earnings are over the next 12 months from today. That price earnings ratio is higher than any other time since the bull market began in March of 2009. Now, some people would argue, well, it tends to go up close to the previous peak of the previous bull market as you approach and end a recession. The problem with that argument is that we're not even near the end of the recession. Forget about ending it. We're just entering it right now. So right now, Wall Street is very bullish. The only way these stock prices will continue to go higher is if Wall Street analysts are basically being too pessimistic and that earnings will turn out to be better. The problem with that, I've been in Wall Street for 35 years, and historically, Wall Street analysts are more optimistic rather than pessimistic. Let's hope this time they are basically too pessimistic, and that's rare, and stock prices can go up. But if they are too optimistic, as they usually are, then stock prices may see a breather moving forward.